Shane Williams, CEO of West Red Lake Gold, returns to the show. What's happening with the gold space right now? What's the outlook for commodities? What's the outlook for precious metals into 2025? Exciting times ahead for 2025. And we'll talk about the project updates for West Red Lake Gold as well. Welcome back to the show, Shane. Good to see you. How are you?
Good to be back, David. Good to be back. All is good, David. Coming into the end of the year, it's getting busy, so that's good.
Well, you've been on the show several times calling for a higher gold price, specifically 2,700 gold. 2,750, I believe, was one of your calls for how gold may end towards the end of the year. Well, you've been exactly spot on. In fact, it's actually surpassed your initial target. It's gone past 2,700 to above almost 2,900. Now it's come down a little bit. So now that it's hit your target several times throughout the year, first you said mid 2,500s, then 2,700. What's next for the price of gold is what we're asking. Could you expect more consolidation around current levels, or could you expect some sort of push upwards towards 3,000 by next year?
Yeah, look, I do see the 3,000 for sure as a level that gold is going to come into 2025. I do see a little bit of a consolidation now, with the Trump presidency, et cetera, et cetera. His motion is make America great again. The dollar will become much stronger, and that's always a headwind for gold. So, I do see a little bit of that, a bit of consolidation early. But as we get to the back end, probably of 25, I see it getting close to that 3,000 target for sure, David. I see that. And the macroeconomics are still there around gold, the big picture, political instability, et cetera, et cetera. So all that's still there. I think there's a bit of consolidation now to get through, given the presidency, et cetera, and the dollar will get a little bit stronger, get some defense, and then I suspect towards the back end of the year that will trail off, and we'll have another kick for gold later in 2025.
One of the drivers for gold is inflation expectations. Let's just get your expectation from somebody working in the mining industry on the ground. Are you seeing inflationary pressures, at least from your industry, the mining industry?
Yeah, we are. We're definitely seeing inflationary pressures, and as an example, you see that all the big majors have come out with their quarterly results over the last couple of weeks and months. And, their AISCs, which is the main cost associated with producing gold mines, are much higher. They're getting higher and higher. And we're seeing that on the ground. We're seeing the cost for materials go higher, power, diesel. It's all ramping up. So we are seeing cost inflation in the business for sure. Yeah.
How is the mining industry going to combat these rising costs?
So a lot of it has got to do with efficiencies, David. Most mines actually, the largest cost is actually labor costs. A large percentage of the costs on any mining is labor costs. So obviously labor costs and wage inflation is part of it, but also those efficiencies, getting those efficiencies into the business, into the workforce, into the practices. That's kind of how you balance those inflationary pressures. There's a lot of work ongoing with optimization, looking at all the costs, having a good understanding of your costs and where to focus to balance those inflationary pressures.
Okay. What do you think are the priorities for gold miners overall into 2025? Gold has had a tremendous year in 2024 and actually most of 2023 as well. Speaking about the seniors first, a lot of people in the gold investment community are wondering whether or not next year is a good year for M&A now that they've had all this cash built up from a great year of good cash flow. M&A this year was still relatively muted. What about next year?
Yeah, I do see a bit of some muted on M&A. Look, remember back to the 2010-11 sort of last big gold cycle, a lot of the big companies went on a big M&A spree, and then over subsequent years there was a lot of write-downs and a lot of issues, and the gold miners got slapped a little bit for being too aggressive with their M&A. So I do think they're now focused on cash flow generation, returning to shareholders a little bit. So I expect not to see the same sort of M&A focus was back in 2010-11. They're generating a lot of cash. The free cash flow yields are quite high. Dividends are quite high. I see a lot of return of capital to shareholders rather than going on this M&A spree.
Okay, now going back to the gold market, one of the One of the concerns for gold investors is that the economy may be very strong next year. The stock market will do very well. If tech stocks do well, it's going to pull some capital away from what are traditionally risk-off safe haven assets like gold. So how does the mining industry stay competitive in an environment where risk-on sentiment is still strong?
We are beginning to see, I would counter a little bit. We are beginning to see flows of money back into the gold ETFs, which is always a sign that investors are waking back up to gold. They're reviewing gold. They're beginning to, for many, many years, we've had gold flows money flowing out of the EFTs. Now we're beginning to see a reversal. So that's really where we're seeing that. And I do expect when you started the margins now are very, very high with gold at 2,700. For some of the majors, the margins are over $1,000 an ounce sort of margin. And that sort of cash generation will attract investors back into the business as for growth. As they grow and they get that cash flow yield up, that'll definitely excite investors back into the industry.
What are some of the emerging trends in the gold mining industry that we can expect to see in 2025?
Yeah, there is some, there's a lot of the mining industry has suffered, unfortunately, a bit of a, technology has been a bit of a backstop for the industry. And I am seeing quite a bit of emerging technologies coming in exploration, as an example. There's a lot of AI sort of processes and models to help exploration and help focus on where to drill, how better to target the drilling. We're also beginning to see underground technology, as in automated vehicles and automation and electric vehicles. So we are going to see those. This comes back to, as I was talking about, optimizing our costs, etc. All these optimize the costs and make it more efficiently. So we are seeing that coming into the industry.
Let's talk about West Red Lake Gold itself. The bigger timeline. I think investors want to know the bigger timeline here. We talked about restarting the mine, the Matson project. We talked about on the show. People can check out prior interviews with Shane, by the way. Links down below. But we talked about in prior interviews potentially starting the mine next year, moving into production by next year. Is that still the timeline?
Yeah, that is the timeline. Some of your followers or whoever following West Red Lake will see lots of press releases now on a monthly basis on giving updates on our construction and our progress and where we are. And so we've been doing that now for the last 4 or 5 months, every month, consistently. And people will see we're beginning to bring all the final pieces of that work together. All our infrastructure that we bought, connection drift, our camp, our crusher, they're all coming on site. We've started some test mining program. We're all bringing that together. The plan then would be, Q2 next year to move that project, to move all those together and move into production, basically in Q2 of next year. We also have a pre-feasibility study coming out in early January, and I think people will look to that, and that would be a trigger to move forward on the restart of the project.
Okay. Any recent drilling updates that you can give us now?
Yeah, we've had some, as I said, we've been talking a lot about de-risking and moving the project forward, but recently we've had a good success on exploration. There's some very high-grade zones that the team are beginning to tap into around the mine, and these have really the potential to change the trajectory of the mine, because they're very, very high grade and they're close to infrastructure and close to surface. So these can be game changers for the Matson mine as we move forward.
Okay, well, let's give some more historical context for the viewers here. You've been appointed CEO when and since you've been appointed CEO of West Red Lake Gold, what have been your top priorities? Let's walk through the historical timeline here.
Yeah, so I was appointed in June 2023, so not that long ago, nearly 18 months ago. And I remember this was a project that we bought out of the CCAA process. So the immediate priority was really to focus on the understanding of what went wrong, what are the issues, and how can we do it differently, and what do we need to apply to the plan forward to make sure that we don't repeat those mistakes and learn from them. So mainly technical drilling, understanding the ore body, lots and lots of drilling. We've been drilling now for the full 18 months. Underground development has been a focus, and those capital projects. Really real technical focus on the project, on moving the project forward. That's my background. I'm a technical person. Built a lot of these mines and restarted. And so that's really the key for all of last year and the early part of this year as well, on that understanding.
Can investors expect any changes to your company's capital structure leading up to the production of the Matson project?
No. We recently did an equity raise in November, and we're also working on a debt deal to finalize a debt deal. And those two together will allow us to have the full capital required to put the mine back into production and generate free cash flow.
What was the philosophy or the decision behind doing the production yourself? I mean, presumably you could have done a joint V with a mid-tier or a senior. Presumably you could have positioned your company for a takeout to, have somebody else buy it, but you wanted to, produce it yourself. Why?
Well, and really was we targeted this acquisition for that reason. It was really set up ready to move back into production quickly. Normally the juniors, as you know, they do the studies, they de-risk early stage, and then they use the majors to come in. We're in a different, there's been over $350 million spent on this project. And so it's ready to go effectively. It was in production, it was producing. And so it's more of a process of just getting the right team in and turning this on ourselves rather than waiting. We would have been in quicker to get in production rather than waiting for somebody to come in and buy us. Really.
Would there be different challenges for setting a company up for production versus setting a company up for just, acquisition, different routes, I presume? What are the major differences and challenges and opportunities here?
Well, in reality, that's part of the problem that the previous operators faced. They were more setting the project up for a sort of a sale process and somebody to come in and buy it. And they weren't really focused on the delivery of that, to making sure if somebody doesn't come along, they have to build it and operate it. And so they didn't put the framework in place for operating. So some of the keys are having the right people in who have done this before, the experienced operators, the people who have actually built and operated mines. So we've been very good at hiring those key individuals who have done this a few times before and putting them as part of the team. That's really been our key focus for us over the last 12 months.
So what are some of the milestones or developments that need to happen still before we can expect production?
So we have we're doing the test mining program at the moment. So that's ongoing. So by the new year, that should be finished. That's a key part of it, a bulk sample, and do a reconciliation to the ore body versus the bulk sample, have results of that. So that's a key milestone to do that. And we will be publishing results around that, etc., giving the market that confidence. We also have a pre-feasibility study that's coming out early in the new year. And then also, as we go forward, we'll be making those decisions to do the ramp up of the mill. So they're the three catalysts that I see, big catalysts for the company over the next 8 to 10 months.
Well, once you go into production, one of the issues that you may encounter is possibly, I'm not saying it will happen yet, but possibly broad-based tariffs on Canada. Now, Trump has threatened broad-based tariffs on Canada and Mexico and China. And now the BRICS countries for abandoning the dollar. Let's assume he goes ahead with some of these threats and he follows through. How is the mining industry overall going to cope with this in Canada?
Well, it's from a gold mining business, it's not a large effect. Some of the big mining companies who, export some of their product to Canada or from Canada to the US, they would definitely be affected with those tariffs as they're bringing in. A lot of resources in Canada is produced and a lot of it goes to the US.
Yes.
So that's potentially some issues where Trump will push for resources, mines within the US. So that could have some effect on the gold mining industry and the mining industry in Canada and the resources industry.
But why is the gold mining industry more insulated from this?
Well, because we produce gold bullion most of our gold bullion is kept in Canada. It's kept in Canada within the Royal Canadian Mint, within various mints around Canada. So it's not actually exported very much. And most of the product we get or the raw materials are either produced in Canada or imported into Canada. So we're not exporting material out to Canada, whereas some of the big other companies who produce concentrate or products, etc., they're exporting their products to the US, and potentially they would get hit with tariffs.
Finishing off back on the gold industry. So gold, as I said, has had a tremendous year, $3,000 gold. Would that be driven primarily from institutional or retail demand next year, do you think? If one were to speculate.
Yeah, I would say it'll be institutional demand next year. A lot of it was last year, as I said, as the margins get much bigger, as the free cash flow begins to generate, as people see that as the new norm, the new high, I would expect that the institutions will, as you know, the stock market is getting it's very high. And if there is some more political uncertainties, I suspect the institutions will come into the gold industry, the EFTs, which will drive the price of gold and then drive the margins for the miners.
For now, though, the gold price is taking a bit of a breather. Today we're speaking on the 4th of December. It's hovering around $2,600, $2,676. Why do you think it's come down a little bit from its highs since we spoke last?
Well, look, always in these sort of bull markets, there's always a consolidation phase. There's a number of these. It has moved very high very quickly. Within the last 12 months, it's up 25% at least. And so there's always a consolidation. So I expect this is just a consolidation phase now that we will get into before we'll have the next leg up of this product. So that's and the Trump election, the dollar is beginning to rise again. Yields in Treasury are all up. So that's kind of had a bit of a headwind to gold or tailwind to gold, which has caused this consolidation.
For a gold miner, especially a junior miner, does the price of gold affect your strategy at all? Meaning, does the price of gold affect your tactical operations? Does it affect when you start to drill? Does it affect when you start to, in your case, put your project into production?
The near-term producers like ourselves that are moving quickly, the quicker we move towards production, we're hitting production in a rising gold environment. That's always the best way to restart a mine. And that was been our strategy. We've seen gold, these headwinds for gold. So that's why you asked a while ago about why would you not wait for somebody to help you or a major or something? Yeah. We see those gold prices, and the quicker we can get into production, those gold prices will help to stock the company, our shareholders. So that's, for the juniors, it takes so long today to build a mine. It's a 10-year cycle sometimes to build and operate a mine. Yeah. There's going to be a couple of different cycles. They're not going to meet this cycle. So the developers are moving quickly into production, and the juniors are just moving along. The gold price has interest from an investment point of view. People will want to get in on the story and early, but as an actual moving to production, they're quite a bit away from production, some of them.
Great. Well, let's keep in touch, and we'll do another update early on next year so investors can stay up to date. Where can we learn more about West Red Lake Gold in the meantime?
So West Red Lake Gold is on the TSX-V, WRLG.V. And our website is westredlakegold.com. Both of those areas. And you can sign up for investor news onto our website and get regular updates on West Red Lake.
Okay. Excellent. Thanks very much again, Shane. We'll speak again soon. Take care for now.
Excellent. Thank you very much, David.
Thank you for watching. Don't forget to like and subscribe.